Welcome to Investing with Beecham and Bright, IG's financial podcast. I'm Chris Beecham, Chief Market Analyst for the UK. I'm delighted to say that we are rejoined by Aaron Bright, who has returned safely from his travels in South America. Aaron, how are you?
I'm good, thanks. I've recovered from the jet lag, thank you. It was only a few hours time difference, but it was just,
How long's the flight?
Well, to Buenos Aires, where I started, it was 16 hours 40 via Rio, which was, I'm quite tall, so I made sure I got the bulkhead seats. Otherwise, it would have been unbearable.
Okay.
And then the way back from Rio was 12 hours, so not too bad.
Oh, okay. So tell us about Argentina. Because, of course, it's a year to the day, I think, since Milei was elected president.
Yeah, he's done a good job there for sure, and it's an amazing country. If you like steak and red wine in particular, absolutely wonderful place. I mean, some of the best steaks I've had, but you have to really specify that you want it medium rare if that's your way of having steak, because they're in South America in general they prefer it well done.
Do they?
Yeah, so you have to say in very, very broken Spanish, mucho jugoso, which means very bloody, and then they'll give it to you sort of medium rare.
Oh, right. I didn't think they'd do it differently.
I know. That's like apparently quite South American, is they have it quite roasted, quite well done. So if you like medium rare steaks.
No, I've gone off them slightly.
And the Malbec's brilliant if you like that.
Yeah.
Kind of. The currency situation's a bit bonkers there.
You've had inflation was something like 220% a year ago, and it's now down to 2%.
Yeah, I think month on month is still a few percent. Which is not great, but I mean, considering where they were, really, really positive improvements in inflation in Argentina.
What's the feeling on the ground? Because he's getting a very good write-up in the press. Even the FT and the Wall Street Journal, who weren't, I think, fair to say to them, fans of him before he took office, have been fairly, optimistic on his prospects.
He's done a lot to bring down inflation, but I mean, speaking to actual Argentinians in Buenos Aires, a lot of them will say, they miss the sort of old politics, and then some of them really like what he's doing because they care about, bringing down inflation, making things affordable. But what was quite funny is during the World Cup, or just before the World Cup, 2022, they ended up winning the World Cup. A tour guide of one of these tours I went on said that there was a sort of, I guess you could say, like an opinion poll. Would you rather bring down inflation or win the World Cup? And the majority said win the World Cup.
Yeah.
So it's an interesting.
Which may, in a sense, summarise South America's economic problems over the past 30 years.
Yes. But I mean, I guess it's interesting to explain why they're in the situation they're in. So maybe I'll do a quick explain in 30 seconds.
I'll explain in 30 seconds.
On Argentina's economy.
On hyperinflation, yes. Off you go.
So Argentina have long had problems with inflation. I think even, during the times of the military junta there, they had times of inflation and hyperinflation sort of in the hundreds of percent. And a lot of this has been due to excess spending and printing money, which seems very illogical coming from, a country where we're very prudent with fiscal and monetary policy. But in these situations, to get out of debt or to fund, they've got a lot of state-run programs. They were in a situation where they were deciding to print money to pay for things, which I always think of the saying, if money grew on trees, it would be as valuable as leaves. So that's
a good one. I might steal that.
Yeah, it's a good one. It's a good line. So that's I guess what caused the hyperinflation. You've got excess of money being printed, using to buy a limited amount of goods, or using to fund a limited amount of goods and services, and then you get prices being driven up, and you actually get that in the exchange rate as well with the Argentinian peso. I mean, it's devalued massively. And when you compare it to sort of Western, more stable currencies.
And it's essentially they did print money, whereas in the West, of course, with the Fed, we get accused of printing money, quantitative easing. But the Argentinians did print money.
Quite literally, yeah.
Just rolling it off.
Mm-hmm. Yeah.
Which ends as well as you might expect. Because it's the kind of thing I remember from my GCSE history, Weimar Germany, and people wheeling around all these wheelbarrows full of money, that kind of thing.
Absolutely, yeah. And I had that in a steak restaurant. I showed you the video, Chris, where one of my friends decided to exchange a load of dollars for pesos, even though you can use card there. So I think he got about $300 worth, which is something like 300,000 pesos or something. Right. And the highest...
Well, at least it was at the beginning of the meal.
Yeah. And the highest denomination of notes is 1,000. So he's walking around with 300 notes around. So to pay for a £40 steak and wine, it was quite an ordeal to sort of count the notes. I mean, rather bizarre, but
it's remarkable. And then you come back here
and it's all contactless tap. Yeah. They do actually have that there, but a lot of people tend to use dollars.
I suppose it's stuff you can see and feel.
Yeah, it was a bit of a relief getting to Brazil, where I could actually not worry so much about the currency, and I could just tap and pay. Anyway. I just had to worry about being mugged, which thankfully didn't happen. So
that's good. We are glad to have you back. Of course, it's our last episode of 2024. So, as is customary at this time of year for everyone and everything, we're going to look back at the year that was. Any guesses on one of the best performing markets of the year so far in percentage terms? I haven't queued him up here, so I really am asking this question.
Could I have somewhat of a clue? Because I remember 2022 it was orange juice.
Yeah, it's a commodity. It's a commodity, unsurprisingly, perhaps.
Cocoa?
Yeah. Now, I'm looking at one market screen that says it's up 900%. I don't think it is. I think it's more about 300%.
It was about March, April time.
Cocoa's been absolutely nuts for quite some time, and it stormed away to April. Then, as is the way of these things, it dropped like a stone.
Yeah.
Or like a cocoa bean, I don't know. Continue going, and then just about the beginning of October decided to bottom out again. And then if you'd managed to time your entry right, of course, it's the easiest thing is markets, as we all know, then you would have done fantastic well, because it's essentially doubled again in price. But yeah, about 300% return, although angry readers can write in if they found a better one than that. Yes, which puts everything else in the shade, really, doesn't it? But it's a year in which we've seen record highs for Dow, NASDAQ, the S&P, even FTSE 100.
I know.
A record high. We've been waiting so long.
Yeah. I think one came last year as well, if I'm not mistaken. But yeah, we have got a record high for the FTSE.
Any particular market, your market of the year, you might think? Anything?
Well, I just think, I'm going to be very boring here, Chris, so please forgive me. But I'm always impressed with US equity indices and how they just, in good years can print sort of 20%, 10, 20%. I mean, year on year, we've had, I think, 23% last year.
Yeah, it's back to back, isn't it?
Back to back, actually. Assuming that we're recording this on the 16th of December, assuming that there isn't sort of a meteor strike and all equities are wiped off the face of the earth in the next couple of weeks. I mean, we're talking, another 20, 25% increase in US equities, which is really impressive when you think about it. I mean, if someone said to you, okay, you're going to get 25% return, 2020, you're going to be delighted for a typical sort of long-only invest. I mean, it's a brilliant return.
But to get it 2 years on the trot, it's incredible.
Absolutely. Really. So sorry, I have to be boring, Chris, but
no, I think it's a year which they're essentially the only game in town.
Yeah.
Aren't they really? How you could debate how much this is purely down to tech. And there's things this week about saying if you take NVIDIA and other big tech stocks out of US indices, the performance doesn't actually look that much better than Europe.
Yeah.
But it is at that extra premium, if you like, is what people are paying for.
It was similar to last year when you strip out the Mag 7 and the equity was flat.
Yeah.
Same sort of thing. I remember having a discussion with Angeline about it. And, last year was obviously a really strong return, but it was driven by some very small amount of names, really.
Yeah. But that's often the way. And it slightly annoys me when people say, oh, well, if you took out X, Y, Z from it, then it wouldn't have gone up so much. Well, that's kind of the point. If you take out the stuff that's gone up a lot, then it wouldn't have done as well. You don't want to buy. I'd like to buy an S&P 493 tracker, please, because I don't want those.
I'm going to steal your quote here, Chris. The S&P 500 is the greatest momentum fund of all time.
Well, why don't you flip it and say, well, let's take all the stuff that went down this year, and then we'll just look at the performance that way.
What's the opposite of a momentum fund?
Yeah, exactly. Yeah. Well, I bet there's something out there for that, really, distressed situations. But it's an incredible year. But yeah, the FTSE 100, I mean, this comes a week after we had one of its bigger names, Ashtead, announce it's off to the US.
Yeah.
Which is another
Well, it was the worst year for FTSE delistings since the 2008 financial crisis, I believe.
I think something like that, yeah.
Which is, I mean, even sort of, we talk about the lack of innovation in the UK, the lack of tech names, and we had a big departure in the form of Darktrace, which have gone private. Thoma Bravo, I believe it was, took them over. And I would imagine, I mean, who knows, but potentially looking towards a US listing, which is a shame for the LSE in general, really.
Yeah, it's a major headache. You had Ferguson, didn't you? Went a while back.
Yep.
CRH, Flutter, I think was the other one. Those sort of big names that are going, but there's arguably more that could go in the same way, which I think is obviously a real.
And
problem.
You can understand why sort of these CEOs would want to do that, in the sense that the premium you get, as we were saying, in the US is just so much higher.
Yeah, if you look at British American Tobacco, it trades at a discount to its peers, and you think, well, why would you stick around?
Yeah.
Essentially, it's a major problem. So you've had great year for US indices. It's a good year for the FTSE 100. I mean, you shouldn't sniff at what was 9% this year or something.
Yeah.
Like, it's not a bad return.
No, I think if someone said to you, I mean, I remember watching a video about this, and it's actually that's the sort of annualized return of the S&P 500 since the 20s. It's around 9%.
Yeah.
And if someone offered you that, most investors would probably say guaranteed 9%. They'd be quite happy with that.
Yeah. So if you've got that, what else have we got this year that's moved? Oh, gold, of course.
Yeah, that's been a pretty electric year for gold on the whole.
I mean, where were we? What was the record high? It was 27, just shy of 2,800.
Yeah.
But it just feels like everything, well, not everything has gone up, because clearly it hasn't, but you've got the dollar's up, gold's up, equities are up, a lot of commodities are up.
The only area which has sort of struggled a bit, I'd say, sort of from sort of a multi-asset perspective, is fixed income, particularly the long end, where past definitely 2 years, maybe even 2.5 years, people have been saying, well, we're finally in the year for fixed income. And yes, high yield done quite well. Spreads are really tight in that area. Sort of investment grade credit, that area's done okay. But, you look at TLT, which is a 20+ year treasury, in dollar terms, it's down 8%. So not a great year. And I think it really, points to the fact that inflation potentially the concerns of it hasn't abated fully.
No, and this comes just a few days after we had that latest US inflation reading, where you began to not tick up, but it stopped going down, essentially, if you look at it. And it's some components just beginning to worry.
And it's the same in the UK. You've got sort of 4 to 5% service inflation. So what's being charged on services, and that's going up 4%, 5% a year on how much services cost. Those costs are increasing that much a year, and a lot if you think about it. 4 or 5% a year.
Yeah,
you've got to have a 5% pay rise just to be able to afford the services.
Exactly.
Yeah,
where you are in that fee. So we get the UK wage data this week, and that's supposed to show another increase. So the Bank of England's headache is rapidly becoming slowing economy, rising prices.
And you can see why the gilt market and the US Treasury market, but even more so the gilt market, is throwing a little bit of a tantrum and said, hang on a second.
Yeah.
Are we out the woods with this? And I guess that's what we're going to be talking a lot about towards the beginning of next year, when we have some guests on next year.
And one of the key features of the last couple of years has been the relative lack of volatility. As well. If you look at the VIX, it's down. I know we should never talk about the VIX in percentage move terms, because that's not what it's there for, but it is down by about a quarter or something percentage terms over the year so far.
I think the only sort of crazy moment we had this year was yen carry trade, which was the birth of this podcast, really. It was the first episode we were talking about it. Yeah.
And it's just came out of a sort of clear sky.
Yeah.
Didn't it really?
Yeah, I remember waking up in the middle of the night and seeing like a headline on my phone saying like Japanese stock market down 8% or something. I'm like, long Monday.
Interesting element. But it's such a strange feeling that investors have you're sitting here with the Dow at record highs, essentially, and volatility so low, and people, in some ways, rightly asking, where does it go from here?
Yeah.
Where can it go from here?
Well, I think it's really interesting, and I think a lot will come down to US earnings growth when we're talking, obviously, US stocks. And we've seen very strong growth. And if it keeps up, there isn't, unless there's sort of some kind of macro concern, then, the equity markets are driven by earnings and earnings growth. And
there's a lot of focus on, well, what can derail it? But I always tend to think if there is going to be an issue, it's not one you can see coming. Because we sit here at the end of December and we see, well, France, political turmoil.
Yeah.
You've got German elections in February.
South Korea, even.
South Korea, that's sort of talking about things that came out of nowhere and went away again because he's been impeached. I don't know whether that will actually turn into something more significant.
Yeah.
But it's...
And obviously we've had a big year of geopolitics. Whether that continues next year, obviously we've seen hostilities cool, particularly in Lebanon and Gaza. But, whether things kick off with Iran again next year, they can come out of the blue. Like the October 7th attacks were really out the blue. I mean, stuff was bubbling really below the surface, but I don't think many people saw it happening like it did. No. So I think that will be something which, is worth keeping an eye on next year in terms of how that drives markets. Because it drove markets a fair amount this year. I mean, there were, reactions in the oil market about whether the responses to each attacks, whether they're going to be big or whether they're going to be small, or were they in line with expectations, or were they not as aggressive as feared? And I expect that to play a role in things next year.
And if you're looking at this as an investor now, what's your kind of take on it?
Well, it's a difficult one. Do you mean in the sense of geopolitics or?
Well, generally looking at your portfolio, we
Yeah.
were talking about this with Queen last week. She was talking about starting out as investing and how often you review it. And so as the end of the year's been the next year's as good enough time as any to sort of take stock, isn't it? Really?
Yeah, it's a difficult one. I mean, I think any scenario you look at, there's always that what if and hindsight moment. But I mean, yeah, I mean, markets are a little bit pricey, but
Understatement of the year so far, given that US valuations are almost back to 2000 levels.
Yeah. So very pricey, I should say. But look, if you're in it for the longer term, I think it's always sensible to build sort of a robust, diversified investment portfolio, and that's probably the sort of conversation you were having with Queen. Yeah, that's what we do when we're managing the portfolios. Obviously, we are aware of valuations and how they are, and it plays a role in how we tilt the allocations towards equities, towards fixed incomes, and towards alternatives. But we're trying to build something which can last, and many investors will want to do that, which will be able to ride out any sort of idiosyncratic events or even events which shake the whole market. That they're robust enough that there might be some peaks and troughs, but over the longer term they'll be able to recover from it.
I suppose it's a concept more of rebalancing, isn't it, than anything else?
Yeah, it's really, really important for us, and it's about having allocations in line with your risk appetite. That's the most important thing.
Yeah, because you have periods where, say, you allocate X amount to US equities, and then that the weighting in the portfolio gets bigger.
Yeah,
and so you have to.
That's what we've pretty much had to be doing.
Trimming the exposure as well.
Well, we sort of kept it in line because we were a little bit underweight, and then it drifted into being because the equities rallied so much. So then we readjusted it, but it actually. We added a little bit to equity, but because we drifted quite high into, higher into equity than we originally were at, I think it was, not significant amounts, even though the percentage change was adding a little bit more equity earlier in the year, but it actually drifted up because equity markets had such a strong rally.
And I think you don't have to sort of exit the position entirely, do you? You don't say US markets have gone up too much. I don't want to be in US markets.
No, it's just about having your exposures where you see fit or where the portfolio manager sees fit.
It's about time horizons.
Absolutely. And about perceived risk and opportunities elsewhere, potentially. I guess what I would like to ask you, Chris, is what are you most concerned about for 2025?
I think at the moment, just as we sit in the middle of December, what does concern me is maybe how not over optimistic, but people seem relatively blasé about the current market outlook.
Yeah.
And there's a lot of focus on things like US exceptionalism, and US stocks should go up because of the following reasons. Then it kind of morphs into and therefore it will continue to go up for X amount of time. And it's that kind of just complacency that bothers me to an extent.
I agree. Like I remember seeing this sort of 2020, 2021.
Yeah. Because it's the last time we were here, really, with record highs. We'd rebounded from
You just
COVID.
think, I'm going to get 10, 20% a year forever, and it just doesn't happen.
Yeah.
And it's one of those things where you never want to make the call too early, but you certainly don't want to make it too late.
No, it's the problem with investors. Do you hang around while things continue to go up, and do you run the risk to get sort of holding the bag, if you like, when it all comes off?
Because there were arguments that things were overvalued at the beginning of this year, even.
Yes.
And, we're up 20%.
Yeah.
So, I mean, I remember looking at the stocks at the end of last year and thinking, given the fact that the recession could be coming, which has never come, and we're arguably now moving towards that soft landing.
Well, yeah, I mean, this is the other thing we should talk about. 2024 is the year where the soft landing probably did arrive. And for jargon's sake, soft landing is where the economy slows but doesn't go into recession. It continues to grow at a fairly steady pace.
That was the debate. And I think many people in 2023 thought that we were going to get a hard landing.
Oh, yeah. That was all the rage at the end of 2022, beginning of 2023, was there will be a recession. Stocks have had this rebound. Bear market rally was always the phrase I heard bandied around. Inevitably, the bear market rally turned into a new bull market really, and caught people out. But there's still no sign of recession. That I did say this last year as well. The fact that everyone has sort of stopped calling for a recession did make me worry. Yeah. Now, clearly, that hasn't materialized.
Yeah.
But it still concerns me that we assume you're not going to have one. But there was the thing about the SARM rule triggering and US unemployment, and that signalled the beginning of something, and the yield curve uninverting.
Yeah, which is the sort of bear steepening. People are concerned about. But look, it's a really interesting one, and I still don't think we're fully out the woods with regards to that.
No,
things can change very quickly.
Yeah, and I think that's just what people need to be careful of, is that the things like the French elections and the German elections and the new president of the US, markets can kind of adjust to that. And you've had a classic case of in France over the past couple of weeks where the CAC was at sort of 3-month lows.
Yeah.
And then once Barnier was ousted and suddenly it became certain, it rallied significantly because it had essentially priced it in. So you already had the move. So markets can, if you can see what's coming, then you can prepare for that to an extent. It's the thing you don't see, which examples would be the Bank of Japan this year.
Yeah, that was a real shock for everyone, really. I mean, everyone knew the carry trade was happening. And I think people knew that if it was unwound in an unsustainable manner, we were going to get these sort of moves in both the yen and global stocks, but particularly the Nikkei. And it's still, everyone was like, oh, how's this happening? Yeah.
And it seems it's the late Queen asking the economists after 2008, why did nobody see this coming? That kind of thing. It's always
Michael buried this.
Yeah, well, yes, and has not particularly been right ever since on calling his. Was he, of course, was famously. Was it last October he went sell on the S&P, or he's put
But even the best investors make mistakes. I mean, Bill Ackman exiting Netflix at a sort of all-time low.
Yeah, exactly. Rallied massively. That's the lesson, isn't it? Investing. It's you can't call these things.
Yeah, I was told by an old boss. In investing, if you get 51% of the calls right, you're doing a good job.
You're doing a really good job, actually. Yeah, because so often we find this with the trading side of things, that clients can be more wrong than they're right in terms of their actual.
And even your research and analysis can be correct on, potentially even like, for example, shorting Tesla in 2020.
Yeah,
there was a lot of really really good research on why it was a prudent idea, but obviously you would have lost a ton of money.
Yeah, you have to follow what the market's telling you, really, and then. So we've had stocks, we've done. What about the dollar? That's probably the last big area we should talk about.
That's an interesting one. I think it's going to be driven a lot by the US interest rate cycle, which I think we both called 3 rate cuts this year, which I think we're spot on. I think I actually called 25, 25, 25, not the 50.
Yeah, well, I think the 50 caught most people by surprise, really. And I don't want to say they were wrong to do it, because it's easy to poke fun with hindsight, but maybe they just got a little bit too... Excited, exactly, on the back of that in September. So that's the other interesting one to watch, is that you've had the dollar rally so hard from the October lows. Where does it? It's back to the highs it was in late October 2023, a year ago. So the question is now really, is there a lot of the good news baked into the US economy as well?
Well, if you're going on a trip to the US from the UK, you hope it
comes off. Yeah, exactly. But it's a really interesting thing to watch. So So that's kind of the year in review. Really, the year in which you had a fantastic performance for stocks, particularly US stocks. The other maybe story is just China, the stimulus that refuses to arrive. It's interesting that you had that pop last week with Hang Seng.
And then that big pop in, I think it was September.
Yeah. But just not delivering.
Mm-hmm.
So there's perhaps your worry for the year is deflation.
Emerging markets in China in particular.
Well, yeah, dollar strength would obviously feed into that as well, wouldn't it?
Definitely.
That would also make stuff a lot more problematic. So there we are, 2024, a year that surprised most people.
And a year we founded the podcast.
We founded the podcast, so there we are. We round off the year. Now we should finish off with On This Day.
Yes.
As ever. Have you got any suggestions?
I do.
You've come up with lots of them. You have 2 weeks off.
I've got a few, don't worry. 16th of December, 1653, Oliver Cromwell becomes Lord Protector of the Commonwealth of England and Scotland and Ireland. No doubt you had that already.
Yes, I did, but that's an interesting one, certainly from that when he was sort of king in all but name, but wouldn't take the title.
Famous Puritan.
Yes.
Banned Christmas.
Yes. Yeah, they did ban Christmas. Yeah, right. So Killjoy's modern equivalent. Yeah.
1707 was the most recent eruption of Mount Fuji.
Oh, okay.
So, 1773, American Revolution. Boston Tea Party. Members of the Sons of Liberty, disguised as Mohawk Indians, dump hundreds of crates of tea into Boston Harbor as a protest against the Tea Act.
Yes. Now, this gets a lot of sort of, it's a sign of liberty, people imposing taxes on consumption. It's mostly because they were worried about just the sort of dumping of tea from India and bring down the prices and ruin everybody's.
Oh, really?
Yeah, so it gets a nice patriotic spin on it these days.
And then 3 years later, we have the Declaration of Independence.
Yes, and then it all kicks off, obviously. But the sort of fires the starting gun or
1944, World War II, Battle of the Bulge begins, was the surprise offensive of 3 German armies through the Ardennes forest. I don't know if you've ever seen Band of Brothers.
Yes.
But that's a great depiction of
in the snow
of how brutal I think the German artillery was on sort of the encircled paratroopers.
Yeah,
US
very much
paratroopers.
a surprise. Yeah, Bastogne. Yeah.
Yeah.
And then it's also the worst World War II film ever made. It's called Battle of the Bulge.
Oh, really?
And it was so bad that Eisenhower, who was obviously in charge of the Battle of the Bulge, came out of retirement to say this is an awful film and nobody should watch it. That's my favourite fact about that. So, any others?
That's it from me. Do you have anything?
Yeah, it's a great one for the arts. Actually, the 16th of December. I notice. I'm sure everyone will agree. Beethoven and Austin were both born on this day.
Oh.
So, composer. Also, Zoltán Kodály, which is a Hungarian composer that most people haven't heard of. But then literary things, Noel Coward. I mean, Noel Coward?
Rings a bell.
Yeah, famous English satirist and writer. And also 2 big ones from the world of sci-fi. Arthur C. Clarke and Philip K. Dick. Have you read Philip K. Dick?
I have.
Blade Runner?
I know Blade Runner.
He wrote the book that it's based on. So, so Do Androids Dream of Electric Sheep is the title of the book. But so there we go. The 16th of December. Quite a lot going on. So thank you, everyone. That is it for the year. Thank you, Aaron. Nice to have you back.
Great to be back, Chris.
Yeah, love to have you with us again. And we will see you again. We're back on the 6th.
6th of Jan, yeah.
When we have, who do we have?
Joe Little from HSBC.
Excellent. He will take us through what they see for the year ahead. Should be really interesting.
Brilliant. Take care, everyone, and Merry Christmas.
Thank you very much. Merry Christmas.